Nancy, let's get you in here. First of all, what do you think about this profit story? I mean, we've got better positive surprises than negative surprises, and the S&P profit numbers are coming in good, double-digit, and as I said, the Dow Jones numbers, which is a bigger survey, those are coming in very well, and yet, no one seems to care. Is this a real bearish outlook of the future, or is there something else going on here besides earnings?
Well, I think there's two fundamental issues. I think the technical data matters in the short term, but don't forget what investors are looking for is solid evidence of visibility, and they didn't get any in these earnings reports. And there's no incentive for management to give visibility in these earnings reports. Secondly, at the margin, Jim, you asked who's trading around this technical stuff. I think one of the most important issues that's facing this market is the historically high levels of foreign ownerships of U.S. equities. Money, I believe, is being repatriated in this environment due to a declining dollar and due to uncertainty. At the margin, Europeans would rather own their own securities than own ours. And so, technically speaking, I think that's what's been influencing us in the short term.
But, you know, Nancy, let's go to that dollar nexus with foreign investors. We've seen this movie before. It's often the beginning of a tremendous upcycle. For example, the dollar has come off, which tells me deflationary pressures are easing. And another anti-deflation sign, tremendous price action in gold and metals. Gold and metals and mining indexes are really ripping along nicely. Now, to me, playing by the old rules of the past 20 or 30 years, that suggests not only that deflation's over, but also some kind of industrial business recovery is in the cards. Is this all just kind of a new book now?
No, see, I agree with you, but I think investors are waiting for evidence, and when there's uncertainty, they flee to what they know best, and it's commodities. I mean, it's not just the metals, as you know, it's the whole CRB. It had a great run last year. So I think what you're seeing is the reaction to uncertainty, and having run money in Europe and the Middle East for many years, repatriation occurs at heights of uncertainty, and I think at the margin, that's what we're experiencing right now.
Hey, Nancy, let me follow up on that, because one of the things that I find, and I know Larry finds this difficult, is that we're optimists. And I know that from your piece, the Discontent Winter piece that you wrote, which I read, which is excellent,
thank you,
that you are an optimist, too. At what point does optimism just start costing us too much money?
About a year ago.
All right. I didn't mean to get personal. I mean, but at what point do we have to just say, look, I'd love to believe that a bullish scenario, but the reality is that it's just too expensive to feel that way, and we've got to keep a high cash reserve, perhaps?
Well, I'm not arguing against cash or being fully invested, but I think now is not the time. And you know, I know a number of us have been saying that for a long time, but I think if you look at, I mean, what's the flip side of a strong euro? It's weakness, as we're starting to see in the European economy. So I think now's the time not to bet against the U.S., understanding that we're going to see volatility until we get evidence of visibility from corporate America and the uncertainty of Iraq goes away. Certainly Washington policy can influence us at the margin, and I think we saw the effects of that with the dividend tax announcement in the Bush plan. We've given that back, but I think if we get more out of the president next week, we'll start to see some movement in that direction.
But Jeff, I'm going to stay on this more or less. You mentioned before